Hi, welcome to the video today. It is the 12th of March, it's Saturday, it's our weekly Forex forecast. In today's video, we are going to be picking out pairs that we think could offer good risk-reward trading opportunities for the up and coming week. We've got quite a few charts to look at. We'll go over to them in just a moment. Now, in terms of the markets, we have high volatility. The volatility will not be dropping down in the coming week, in our view. Not only do we obviously have the Russia-Ukraine crisis, we have central banks at this moment in time having to hike rates into slowing growth to contain inflation. Now, in terms of that scenario, it isn't good for the global economy at all. It will create a lot of volatility in the FX markets, though. Now, in terms of volatility, a lot of traders say to me, I'm not really getting anywhere. I keep getting spiked out the market. So I want to go through some strategy tips in relation to dealing with high volatility and making it work in your favor so you can get big trends with good risk to reward. Now, in terms of all the trade setups and discussing tips in relation to dealing with volatility, we'll go over to the charts right now. But just before we go over them, always keep in mind, it's my view as of this specific moment in time. It can, of course, change in line with market action and conditions. If you want to learn all our trading techniques and check out our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and get live access to our member center. You can also check out our recommended broker, join our Facebook group of traders if you wish, and finally follow our Facebook page. Now, I've been doing my updates for the weekend in the member center, so I'm going to use the charts from there. So let's go and take a look at them. Just before we go and look at individual pairs, I want to look at this chart here from corporate Nordea, very relevant to the USD in the up and coming week because we have the Fed. Now, in terms of the chart, you can see where my cursor is here. In December, the Fed members on the dot plot were seeing interest rates going forward at just above 2%, okay? Nordea speculating when the dot plot is updated at this meeting, they're going to be seeing higher rates at 2.5%, which would be in line with the way that Fed members have been speaking and Fed Chair Powell. But look at market pricing. The market isn't seeing rates even above 2%. Okay, market very cautious, or think the Fed will be very cautious due to what's happening in the Ukraine. The US are more focused on the domestic economy and inflation. So if we get a hawkish Fed, that's going to be good news for the USD. It's been doing okay over the last week. I think in the week coming up, it could have a really good week if we get a hawkish Fed. Now, in terms of pairs, I'm going to start off by looking at Euro USD. Right, first pair we're going to look at Euro USD. For anyone new to our videos, when we're trading, we always have a bias from sentiment, first of all, because that's what forms the chart. And that allows us to keep our technicals very, very simple. We only want big levels that we feel are going to be important to big institutional money. Okay. Now, in terms of this pair, over the last few weeks, we've been holding our position from 114.40, and we did see a nice decline. I was saying in our last video, we took some out as we came through the 110 level, and we wanted to see if we could run on the downside. We did run on to the downside. I thought there was a bit more downside to come, but we did get a bit oversold, and you get a correction. Okay, I put my stop at 110.70, just behind this big red here, and we just clipped my stop. Should have had it slightly further back in hindsight, or closer, but hey, that's the way it is. It was decent profit on both trades. First trade well over 400 pips, second trade over 300 pips. Okay, now we wanted to get back in, and we see this is the candle before the ECB. We felt the ECB would not be hawkish. We did see a little bit of strength into the ECB, then we fell back. That allowed us to come in 110.40, so only 30 pips away from our stop, and then we followed through on Friday. Now, in terms of playing this pair, if you wanted to be short, I'll just go through how you could do that in a moment. But I think, this is now a big downtrend. That was just a correction of oversold. If we go to this chart here, we all know It's serious in the Ukraine, obviously. It doesn't look like it's going to get any better anytime soon. And Goldman Sachs is saying they're seeing a hit on Eurozone growth. They're downgrading their forecast from 3.9 to 2.5. It's taking nearly about a third off, isn't it? Now, it could get even worse than that for Eurozone. I just want to show you this chart very quickly, which just shows the hit of natural gas prices on various Eurozone countries. And the main one in the zone is, of course, Germany. It's the powerhouse of the zone. Now, if we have existing distributions, okay, the hit is just under 1%. You can see it where my cursor is. No Ukraine flows at all. That will mean 1.5% as a hit on German growth. And zero Russian pipeline exports would be near enough 3.5. Okay, so it's not looking great. I mean, it's not looking great in terms of Italy either. They're heavily exposed. And don't forget, there's a lot of other commodities that the zone imports from Russia and Ukraine. For example, coal, oil, wheat, etc. So it's not looking good for Eurozone. They're not going to be raising rates anytime soon. Of course, we've got what we believe will be a hawkish Fed coming in to play. So in terms of playing this one, how would you do it? My own view is come through 109, okay? It's a round number. I haven't drawn the level in, but it will be significant. It's a round number. Or you could take a rally. If it went back up towards the 110 level, got above the 110 level, to sell back through the level. Now, if you're trading volatile markets and you want to catch big trends, you've got to give it a little bit of room to stop. So you don't want to be behind first level, okay? Always second, okay? So at the moment, our stop is 111.60. I'll bring that down to 111.30, so just tight behind the second level. If we were to run 109 and get a new chart lows, I can bring the stop behind this level, okay? This is a big downtrend now. That was just a correction of oversold. And we think we're going to 105, then 1000. I'll just put up the monthly chart. 105 is here. And when we had the euro rally there, the euro was in much better shape than it is now, or eurozone. So 105, then you have to go back to, I think, 2003 to see the big par level. But the way things are going, euro could get down there. And the euro's been a decent downtrend for months, okay? So the big trend is down. It has got further to run. The big fundamentals are clearly longer term in favour of the USD in our view. Right, now what to do is go to my next pair, which is another euro pair. It's euro JPY. Right, euro JPY. Now, in terms of euro, fell really nicely. We were short in the last video, and we got stopped out in this blue candle here. That was a decent profit. But then I decided, we'll probably have a go at 127 and fall back. So I sold into the level. We didn't fall back. We moved to the upside. So we gave back profit on that trade. Now, we have come back in short again. We did poke at the 129 level on this candle and came off. And then we poked again on this candle here, right to the level, and came off. At the moment, we're basically at our entry price. I might on Monday just take that out and then look to sell below this low here if we don't take out the low at the open, just in case we pop a bit higher, then we can reset entry. So that's what we will do with the existing position. If you're coming in fresh at the moment, it is through the low. Where could we go to? I think we could go down to 120, which is the monthly support level. I'll let you go and take a look at that for yourself, but potentially a lot of downside. Okay, now the yen, we have the bounce here, but it's been relatively firm on the euro, and it hasn't really gained any safe haven buying from Russia, Ukraine at all. This is across the board. I think next week, if we get a hawkish Fed and S&P sells off really hard, then the yen might well get safe haven buying. It's a bit oversold in a few pairs, other pairs. Take a look at them in a moment. But against the euro, we're just so bearish of, we think we're going lower. Last euro pair I want to look at is Euro GBP. Now, that's an impressive rally. Okay. Now, I would argue that the UK economy is in better shape than Eurozone's. The interest rate outlook is better than in Eurozones. And it's not so exposed to the Ukraine-Russia crisis, the UK economy. So I think that bounce is a sell. We came up to the 84 level, went through it and came back. And then we went through the level again and came back. And this candle moves away from the 84 level. We've taken a short at 83.85 or 83.60. I think if we open at a new low, that's a good sell. It's not much risk in our view against the potential reward. We're looking for a move down to the big monthly support level at 80. So one to consider. Right, now what I want to do is shift over to some more USD pairs, and the pair I want to look at is AUD USD. Right, we're on AUD USD, and we had a rally from the 70 level to above 74. Moved up in a really choppy fashion. I think that tail could be exhaustion. In terms of we look at the background to the Aussie, a lot of forecasters, majority are bullish of the Aussie. They say the RBA will aggressively raise rates going forward, but the pricing is above that of what the RBA are looking for. The RBA are not as hawkish as the market. Another factor that comes into place, commodity prices. A lot of forecasters saying, well, commodity prices will remain firm. That'll keep the Aussie firm. Not strictly true in our view, because if you've got high commodity prices, which we have at the moment, they're not due to a healthy global economy. They're due to a supply shock. Okay, global economy is actually losing momentum. It will contract, not expand from here, and that traditionally is bearish for the commodity currency. So that this tail here could be exhaustion in our view. We came down, then we have a rally back, double top, and a red. My own view is if you get more red or you open below the 73 level, I think it's a sell for a move to these support levels. At the moment, the stop is behind 74. Okay, but if we run on red to the downside, the stop I think can come behind the double top I'm highlighting. So market generally bullish. This is the monthly chart, but we're off the high. And here's the big support level at 70. Okay, so looking for the Aussie to have a correction to the downside. Obviously, the Fed is coming up on Wednesday. We'll see how hawkish they are. Right, we're on USD CAD. Now, in terms of this pair, we've had very scrappy price action, erratic movements, big tails, etc. I think this is getting ready for a big move to the upside. In the last video, the same, we got stopped out in that red on a long position, got back in long, then we got stopped, we got a profit on that one, and then we ran on, and we've actually come in again at 127.85. We're sitting around 40 pips away from our entry, and I think this rally up here and this retracement, we touched the 127 level and bounced back. I think this is a similar background, I'd say, to AUD USD. I think the USD is going to really power to the upside. The way to play this one would be through the open. If we start to gravitate, stop comes up behind this level here, say 127.20. We're then looking for a move to chart highs and then on to monthly resistance. You can see the sideways action here, and here is the big monthly resistance level at 130. We could possibly run on to 135. Okay, so a lot of pairs have seen erratic price action. You have to be patient. We haven't really got anywhere in this pair. It's supposed to be a small profit, small losses, but next week Fed coming up, looking for this one to go higher. Just a few more USD pairs. I just want to look next at USD CZK. So we're on the US dollar against the Czech krona. We saw a huge move up. Now, in previous videos, I'm saying Eastern European countries, they're the most exposed to the Russia-Ukraine crisis, big trade with both nations. You saw a really big move up in the USD against the Czech krona. We were long in the last video, but then we obviously correct, okay? And we key off the previous highs, double bottom on the bodies there, tail, yeah, basically pokes the bodies, and we finish, firm on Friday. We're just about at our entry. I'd like to see us take out this candle tail high here, and then if we do, it's the chart highs 24, which is here, then 25, which is up the top of my computer screen. I just see that as a natural correction of overbought. Alas, it's not going to get better next week in Russia, Ukraine, in our view. So we're looking for another big push to the upside after the correction of overbought. And this move here is a really big move. It's about 7 or 8%. If we do start gravitating up and moving swiftly, the drop can be trailed up, obviously. USD PLN is another one we like. It's similar, did it in a different way. Came down, waited for the double bottom on the bodies here, and now we're back long. We're just basically in at the same level we closed at. Double bodies, tail can't get to them, finish okay. Take out this tail here in the 4 level, up to chart highs, and you can see I've got a target of open. So I think we could go way higher than this pair. So I'm doing both pairs, so I've got a bigger allocation on USD CZK. I think Poland, though, is the most exposed of the Eastern European currencies to what's going on in Russia, Ukraine. You can also look at USD Huff. I'm doing these two with the bigger allocation on USD CZK. Right, that's USD pairs. Now let's look at some crosses. Now I'll look at some JPY crosses. I'm going to look at AUD JPY first. Right, we're on AUD JPY, and the AUD mounted an impressive rally. It's a fairly scrappy price action again, though. Did try a short. Didn't work out for us. But we're looking at the short again. We got through the 85 level. We like coming off round numbers and big resistance levels. And I think 85, decent resistance level after that failure. So we're in basically, and yeah, just basically around entry at the moment. We did try and poke higher on Friday, finished at the previous close. Looking for some red next week, and then hopefully follow on to the downside to correct the Aussies overbought condition in our view. A lot of speculators are bullish of the Aussie and just generally bearish of the yen. So we'll see if this one breaks down, but the risk to reward is okay in our view. CAD JPY. We did have a short last week of that candle there. Came down, I thought we were going to follow through to the downside, but we get taken out as a minimal profit, and then we rally up to the 92 round number. Just want to see if this resistance level holds. You can see tail poke there, couldn't get through. A few tails here, came down. Got some bodies over here, it's a round number. We get through the level, away from the round number, 91.17. We'll see if we can follow through to these support levels, okay? On GBP AUD, and in terms of in last week's video, we had the big fall there, and I thought we were due a rally. You can see here, the tail goes to the downside, then we come back up. I thought that's the exhaustion of selling, so I came in long on the blue, nothing red there, and then bang, big red takes my stop out. But we've now double bottomed on the bodies above the tail. I think if you want to come into this one fresh, if you come in above the high or we come in blue, I think, look for 182, then 184. I think, pound is just really deeply oversold. If you look behind the chart, why? Obviously, not obviously, a lot of people are saying, well, UK heavily exposed to Russia-Ukraine crisis, but it's not as exposed as the Eurozone. Its exposure is not that big. But the market is speculating the Bank of England cannot raise interest rates much going forward. So they pared back what the Bank of England will do, which is put pressure on the pound. We've got the Bank of England coming up this week. So, if you're looking at this one, look for some blue and then look for some follow through to the upside. Didn't work for us last week. We'll see if it works this week. GPNZD, a similar story. Tail down, comes up, body goes to tail, body in line with body and tail, blue. But get above 192, see if she runs to 196. I think it might, if we did start rallying hard, we could even run on to 198 possibly. But if we do see the pound move up next week, I think it'll move up pretty quickly because it's oversold, and you can bring the stop up to basically reduce the loss if you're stopped out. Hopefully runs enough that you can lock a profit. But no, GB pairs for us last week didn't work out. But yeah, in terms of markets, they're very volatile. You can see in terms of big trends, you don't need too many, okay, to make up for your marginal profits and losses, okay. Volatility will not drop down. You need, I think, to have a view on sentiment, which I always say when you're trading, and give a little bit of room for the trade to breathe, okay. Moves of 100 pips or so in a day are pretty common at the moment in most pairs. So you want to be leaving your stop so you don't get stopped out too soon, and look for the bigger targets, okay. Anything else I can add? No, I think that's it. So thanks for watching the video. Take care. Have a good day.